Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 30th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Alright, let's take a look at the overnight changes and price moves to be aware of. And we've seen some rather contradictory moves, or at least on the face of it contradictory moves, in the foreign exchanges overnight. For example, we have seen weakness in both the Australian and New Zealand dollars, and in the Korean won and the South African rand against the US dollar, but dollar index has remained largely unchanged, and if anything slightly down on the day, or down overnight I should say. So some contradictions there, but we'll look at the reasons behind those moves momentarily. Okay, what's on the calendar today? Events that may move the markets. Well, it's a very busy calendar today. Data from first thing right through to almost the close of the day. So let's kick off. At 7 AM we can look forward to leading indicators for August out of Switzerland, and then at 7:55 GMT we shall have unemployment rates and change out for the month of August out of Germany. 8:30 sees the release of mortgage approvals data out of the UK for the month of July, and at 9 AM we'll have business climate data for August out of the Eurozone. At 12 noon we'll have the pick of the morning's data in terms of the harmonised index of consumer prices. That's the ECB's preferred inflation measure out of Germany for the month of August. At 12:30 we jump over the Atlantic to the USA for a raft of core consumption and personal spending data, all for the month of July, and that'll be accompanied by continuing and initial jobless claims for the weeks of the August 17th and August 24th respectively. At 12:30 we'll also have Canadian GDP for the second quarter, data there on a quarter-on-quarter basis and a month-on-month basis, which is for the month of June. And then we take a break till 17:30 when German Bundesbank President Jens Weideman will be giving a speech. Mr. Weideman, of course, has been somewhat sidelined in his quest to take over the ECB chair from Mario Draghi, but nonetheless it will still be interesting to hear what he's got to say. There's a break then until 2301 in fact, before we have the GfK consumer confidence data out of the UK for the month of August. And then we have Tokyo CPI and unemployment data out of Japan at 23:30 GMT to conclude proceedings. Okay then, breaking news and comment that's caught my eye overnight. First of all, the Aussie and the New Zealand dollars have sold off on weak capex and construction data in the case of Australia, and poor business sentiment in New Zealand, and I think it's fair to say at the moment that when the market finds an open door, or a door that opens, it keeps pushing. The IMF has said it will re-examine the timetable of its $50 billion bailout of Argentina after Buenos Aires asked for an early distribution of funds. Meanwhile, EU defence and foreign ministers will gather today in Vienna for talks on issues such as Syria and Russia. It's interesting to note that though it's not a NATO meeting, Turkey will also be in attendance. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? US economic expansion is closing in on the post-war duration record. But as we saw with the stock market yesterday, longevity hasn't equalled outperformance. Indeed, the growth seen since 2009 is the weakest during the post-war period, though of course this particular economic boom in the US has yet to conclude. And here's a very interesting chart from Pension Partners mapping out the post-war boom periods that we've seen since 1949 and comparing them to the ongoing one here. You can see the annualized growth that we've seen in all of these moves and the duration of the booms plotted here in the green line. Okay, time to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of the products for you, then please do contact your Pepperstone account representative. And please take a moment to read this risk warning thoroughly. Thank you for your time.